let's get into some news. We have some things to talk about today, beginning with the price of physical gold. Physical gold. Physical gold having a really good rally as of late. And this morning, as I'm looking here at the price of gold, we see it at about 21.34. So physical gold hitting a record high. It climbed to a fresh record on Tuesday, basically due to softening economic data that has increased the chances of a June rate cut. Now, we told you in our 2024 market outlook at the beginning of the year, we released that on January the 2nd. I shared my belief that physical metals like gold and even silver were set for a potentially positive year. We expected them to outperform this year, largely due to expectations of falling interest rates later in the year. And that's what we're seeing. We're beginning to see gold begin to really accelerate here. And what's interesting is gold has been a little bit frustrating. Even though it's been elevated, it's had this dance that it's been doing in this ascending triangle. We could draw the triangle here and show you. Got a kind of a triangle here and then the flat area there. So you can see it's like an ascending triangle pattern, right? So you kind of like this, and the price action's kind of playing out inside that triangle. And then the breakout happens when you smash above the ceiling. Well, we've had this ceiling now on gold for some time, and we finally got a meaningful breakout now. So back in 2020, let me get my pen here. Back in 2020, gold rallied strong. Remember that rally we had in gold? It rallied from about 1,500 all the way up to 2,000, almost to 2,100, and then failed right there. So then we found resistance, and that long wick sent us right back down. We got a long wick there, indicating we might get a reversal. We sure did. And we came up, and in early 2022, as it became clear that the Fed was going to begin raising interest rates and that inflation was beginning to surge and all of this, gold went up again and hit that same area and failed once again. Long wick up on the top there, and then it rejected, and then it came right back down. Tested the 200 weekly moving average for the first time since 2018. So it began to rally off of that area, and we came right back up in 2023, and it powered higher, but finally stopped short where? Right around 2,100, the same darn spot, huh? And then it pulled back after that long wick and got a touch of the 200 weekly, and then it came right back up again. So you can see that clear ascending triangle pattern going on there, right? And then this week, or of course, I should say we came back and we even went above that area, but then closed right back at the 2,100 level there, as you can see on this weekly chart. Closed actually down here. And then we a little bit of tightness after that long wick there. And then we went for it again, and this week it appears gold has finally managed to smash, and we'll see if it holds above this level into the close. It's encouraging that the breakout occurred on larger than normal volume. We did see some really good volume, especially on Friday, and that's usually a sign of more bullish price action ahead. Now, according to the Fed futures market, investors are now pricing in a 70%. The last time I checked, let's go double check, but they're now pricing in a 70% chance of the first rate cut for June. Okay, so the next Fed meeting is going to be on March 20th. That's just about 2 weeks away. And we also, by the way, have Jerome Powell doing his regular congressional testimony Wednesday and Thursday. So tomorrow he'll be on Capitol Hill, and then he'll be there for Wednesday and Thursday, and investors will certainly be parsing his words and looking for clues as to what's ahead. And so these numbers could change certainly based upon his words. But right now, there's a 97% chance of no rate cut and no rate action at all on this month's meeting. And then in May, that number still remains pretty small. There's a 76-77% chance currently of no rate action whatsoever in May. But June, take a look at June. Things have suddenly changed. You may recall that June was not looking real hot. I mean, there was some expectations, but it wasn't as hot as it looks now. So now when we look at the June meeting, we see now there's a 72% chance, 72% chance now of a rate cut in June. So the market really now pricing that in. And why is it doing that? Well, that figure has risen sharply over the last few weeks, but mostly due to softening economic data. So we saw that February had a poorer than expected manufacturing data. That PMI was weaker than expected. You also had weaker than expected consumer sentiment data for February. And then you couple that with January's annual increase in U.S. inflation at the lowest level in 3 years, and it's clear that the Fed is likely to begin slashing interest rates sooner rather than later. At least that's what investors are telling us that they expect. So for now, we expect more price upside for gold and silver in 2024 amid falling rates and a falling dollar, because they kind of go together. So we can see here what's been happening with gold pushing higher there. Very nice rallying off of that 50 SMA. Look at that volume there, a nice strong volume. That's the biggest buying volume we've seen going back to early 2023. So that was a nice surge. Also, one of the charts we like to follow on gold is the 100 SMA. The 100 SMA here, you can see that it's a really key area. It's not always a key area on every chart, but on gold it seems to really work. You look for breakouts above the 100 and then pullbacks where they kind of backfill that area and then go back up. It got a little tangled up right in here in 2023 when we had a really weird thing going on. But it broke out in October and it's held since. You can see it came back and touched again and then rallied, and volume looking pretty decent there on the gold 100 SMA chart. Turning to silver, silver is still stuck below that 2450 resistance. Now, this morning, as we are doing this, silver's trading at about 24. It's off of its highs. It got up to about 2450. So, I mean, it almost got to that 2450 range. That's the area that you're going to have to take out if you're looking for silver to rally. We got 2330 support. We've got that. We're holding that. That also coincides with that flattening 200-day moving average. Also, for those who trade or who are focused upon silver, you got to watch that 30 SMA. That 30 SMA, especially for the shorter-term traders, boy, that's a really pivotal area. I mean, it really is. And now we're holding that and catapulting off of that. Took out 200-day moving average with higher than normal volume. And now we're flirting with that 2450 level. Lots and lots of overhead resistance here. Silver is facing a ton of overhead resistance. Unlike gold, which is now, in smooth sailing waters where it has no overhead resistance for the most part, silver is struggling. I mean, look at this 2450 resistance, which is going to be a bear. Also, the 26 to 27 resistance zone, looming very large. So to get out of this is going to be a deal. And by the way, if we do it, it'll be a breakout that is a multi-year breakout. I mean, look at this triangle, this symmetrical triangle here that you can see that goes back for 12 years or so, or more than that. And you can see that it's getting really tight here. It's been kind of consolidating right along this upper range right here. You can see it's just kind of skidding right along, kind of touching and touching and touching. It's trying to knock this ceiling out. At least it's not hovering along this thing right here as it was back here, right? And so we've got some lift off here, but it's struggling at that area. So 2450 is a key area. $26 to $27 is also massive. You take out those areas, well, then you probably have your rally. Your rally is probably going to be right there. And when we say rally, we mean, pushing back up to probably $50, maybe a little bit more. Silver, could certainly run. And the thing is that if you ever watch a chart of gold and silver, you'll always see, usually what you'll see is that gold is kind of slogs along, and it kind of moves higher. It usually leads. And then silver just kind of is the laggard, but then it finally catches on and it runs, and it's the second to run. And boy, when it runs, it's a maniac. It's kind of a mania. And you got to be careful with silver, because silver is the one that'll hurt you. Gold, tends to be a bit slower, kind of holds its own, but silver will, get jacked up and, rally big, and then it'll crash and then it'll back up. It's volatile. It's one of the most volatile commodities I've ever seen. And right now, many people are hoping for volatility. They're, come on, move, because it's literally just grinding sideways. Well, the longer that you have a market that does that, oftentimes the more explosive the upside move, right? So you've got a lot of consolidation here going on for the last several years below this line. So you get a nice, meaningful breakout here, you really could have a run. And by the way, silver's trading at a historically low level. I mean, brutal lows compared to, say, the S&P 500, right? Very, very, very low relative to that. And, the gold-silver ratio favors silver right now. So you can clearly see silver is favored on this particular chart. The closer you get to 100, the more bullish it is for silver on this ratio. The closer you get to 50 on this chart, the more bullish it is for gold. Right now, obviously, gold's at an all-time high, silver's not. So that even right there tells you that the ratio is probably favoring silver. Now, one more thing we want to talk about in terms of gold and silver, of course, is that U.S. dollar, because that's the denominator. That's the denominator for all of this. And so as that goes, so goes these metals. And so we're looking at the U.S. dollar, and we see that it's hovering right at that 200-day moving average, trying to hold above it. This news here of a rate cut coming in June, that's not bullish for the dollar. In fact, the interest rate is the price of money. So as the interest rates begin to fall, well, technically the value of the dollar is going to also fall, right? So they work hand in hand. And that's why when you had rate hikes and anticipation of rate hikes in late 2021, and then certainly materializing in 2022, well, you had a huge dollar rally, and that suppressed stock prices. It suppressed many things, right? That's what it does. So now that dollar bull market is over, clearly, and we've topped out back in late 2022, now we're just having these few gasps, these final gasps before we begin to move down. So if you're watching the dollar, obviously you want to watch these two key metrics right here, the 200-day, which is just below, it's kind of hovering at right here, and then also this rising 50. So it might lose the 200 and then bounce off the 50 and then kind of consolidate for a little longer. However, if it falls below the 50, then you've also got this 101 to 100 level. Now, this is a really, really important level. I mean, I can't stress this area enough. This one's the biggie. In fact, you can see it better from this particular chart, which shows you this is a monthly chart, and it shows you the 36 monthly moving average. The 36 monthly moving average. Okay, so that's a big, massive moving average. Now, we've been finding support at that since 2021. We broke out above that area, and that's a really, really, really big moving average. I mean, when that thing doesn't move very much. And so you can see when it starts moving up, it kind of stays that way for a while, right? We still see it rising. So indicating that, there's still some bullishness to work out in the U.S. dollar. However, as you can see, a breakdown below that would be around 101. So that's a really key area there. So a breakdown below that would be significant. That would be the first time since 2021. And you can also see from this chart going back to 1990 that if you break down below that 100-101 support range, well, your next really, really heavy support area is going to be about 93.50. For those of you who've traded the dollar or watched the dollar for years like we have, 93.50 is like an old friend. That's a really key area, and it'll get stuck around that area for some time whenever it finally hits it. We expect the dollar to fall down into this range right here. This is where we expect the dollar to be once the rate cuts really begin to have their effect. The dollar is up right now because interest rates are so elevated, relatively speaking. And that pushes the dollar up. But as the dollar falls, and you see it's 103 something right now. So if we fall from 103 down to 93, I mean, that's going to be very meaningful for prices such as gold and silver and Bitcoin and oil and stocks and everything that's in that denominator, in that denominator. The denominator is the dollar. And so anything priced in dollars is going to feel that impact. So 103 down to 93, not overnight, but we would say, over the next, 12 to, I don't know how many months it's going to be, but, we think it's going to go down. That's where we think it's moving. And in fact, keep it in mind that we're in a big long-term downtrend of the dollar, right? So again, don't forget that. Don't lose that because that's really the key thing to keep in mind here is that we are setting, lower highs, right? So this lower high here was lower than the one we had back in, the wake of 9/11. whenever the dollar soared back in the dot-com bubble and then the 9/11. And it's way below where it was back in the 1980s in the Plaza Accord. You know what I mean? So we're talking, we're just going lower lows, okay? So we're in a bearish channel here on the dollar, despite the current near-term rally. So until that changes, we just expect more downside for the U.S. dollar, right? So we expect, in summary there on that topic, we expect more upside for gold this year as rates fall, which would also lead to a decline in the U.S. dollar as a result. And then we also expect silver to strengthen later this year and into 2025. Silver is dependent not just upon a declining dollar, but also and declining interest rates, but specifically on a robust economy. And so when you have lower interest rates, that bodes well for the global economy, and it can cause more acceleration of economic activity, which is going to be good, of course, for silver. Also, the slowdown in electric vehicles and that demand, that also hits silver to some extent, right? It's not a huge thing, but it's material. And so anyway, there's a lot of things that can go right for silver as we move forward, and there's a lot of things that can go good for gold as we move forward, and we remain bullish on both of them in 2024, expecting them to outperform.